Well, housing crisis, that seems to be the buzzword with government and politics at the moment, and I believe we can start to see that happening to a certain level. However, a lot of it's been brought on by policy, and really what I'm seeing as far as the industry goes is that the industry is being strangled to deliver the amount of housing that's required due to red tape and regulation, and it continues on and on and on, and cost increases as well. But we now have this future fund, which is $10 billion future fund. All sounds great. They want to deliver 30,000 homes in that, which to me, 30,000 homes doesn't sound like a lot out of the 10 billion, considering that last year in our peak, the housing built 215 homes, I believe, 215,000 homes, I believe. To put that into perspective, so 30,000 homes for 10 billion, it's not a huge amount. Yes, it will help a little bit, but the belief that it's going to save the rental crisis, they're quite off the ball with that. So the only way that I think we can save the rent, sort this housing crisis out, is we've got to really look at our regulation side of it and taxes. There's so many factors that come into the housing industry that cause the price being high pricing for real estate. 2, supply constraints. 3, they've got regulations that come through which add extra cost to it. You've got the interest rates as well. Combination of all those become a perfect storm. What we're seeing at the moment is the sales in the housing industry down over 64% to what they were off the peak, just to put that into perspective. Now, when we look at the likes of what they're talking about here, with the Greens pushing their agenda, what the concern that we have is they now start talking about rent freezes. Now, at some point, as the statement says here, at some point the penny has dropped with the government that renters need some breathing space. They need a rent freeze to allow incomes to catch up with soaring rents. Now, I don't know about you, but at the end of the day, if they start to do rent freezes, what they're going to do, and what we're seeing it in some areas now, is the investors will start to sell off their properties, which then puts a tighter pressure on rents because there's less properties out there. Now, we're seeing in our area at the moment, a lot of our landlords, I won't say a lot, but quite a number of landlords are starting now to look at selling because of the interest rate rises. Where the interest rates are sitting at the moment has put a lot of pressure on them, and they're having challenges with those repayments. So they're now looking at offloading some of their rental properties. Now, what does that do? It reduces the amount of rental properties on the market, which is then tightening up that the supply on the market. So to give you an idea where rents are sitting at the moment, vacancy rates for the likes of Northern Territory are sitting at 0.9% for vacancy, and we'll run through the different areas just to give you an idea and an update on what's happening. So Canberra's sitting at 2.1. I mean, 2.1 is low, but it's nothing on what some of the other areas are. So Hobart, 1.9% vacancy. Sydney, 1.7%. Melbourne is 1.3%. Brisbane's 1%. Darwin's 0.9%. Adelaide's 0.6%. Perth is 0.6%. Now, if you look at those rental vacancies there and correlate that with what the market's doing and the price rises of property, it almost correlates with it actually to a certain degree. So where that rental market is tighter, there's also a price increase in the housing stock itself. So back to the fund, we've got a government that's saying that they need 1 million homes in 5 years, and now brought that back, extended that to 1.2 million homes in 5 years. Is it achievable? Well, we just come off a high of 216,000 homes a year off the peak, and the challenges that the industry had with that, where we had trade shortages, we had supply chain shortages. Now, part of that was related to the virus. However, trade shortages are across the board. Now, that they want in 5 years 1.2. That's higher than what we've actually delivered and been delivering in the peak. For instance, if we look at Darwin, that's 10,000 homes I want to deliver in 5 years. Just to put that in perspective, at the highest peak in the Darwin, when the Impacts gas boom was going on and there was cranes in the skies everywhere and delivering apartments, we sat around about the 2,200 delivered homes. That is what they are expecting in the next 5 years. The government are expecting the next 5 years to reach their targets of this 1.2 under the Labor government. So it's pie in the sky. The only good thing about it is that really the industry and government have a target to aim to. Will they achieve that? No, they won't, but hopefully they will create some reforms and look at things differently to be able to assist in delivering more properties. You know, we've got an influx of probably close to 600,000 immigrants coming to Australia. You look at that, plus all the challenges we've got quite a perfect storm. So it's going to be busy for the housing industry. Well, it should be busy for the housing industry, I should say. But at the moment, it's going to be challenged. And it's going to be challenged for some time until they can sort out land supply issues. Start reducing some red tape and regulations. Instead of adding more red tape and regulations, we've just had the National Construction Code 2022 implemented, with a lot of changes for energy efficiency, a lot of changes for accessibility, which in some states have added between $20,000 to $30,000 per home onto the home just through regulation and red tape. The right hand's not talking the left hand. We need this to happen in the industry for that to turn around and really start to be able to deliver. Otherwise, all we're going to see out there in the housing market is prices will keep soaring. We will have a shortage of stock, which we've got a shortage of stock now, but that's going to continue, and I think it's going to continue dramatically. If you look at what's happened in the last 12 months, and we've just come off the back of delivering major highs in construction, to now go in the opposite direction, yet we've still got a demand that's out there, and a high demand. Until we can start to get that balance out, the only thing that I can see the real estate market doing is going up with more pressure on. And whether that be new properties, land, or existing properties, it can only do that one direction, one thing. So as an investor looking at property, I feel it's a good option. We're investing as well into more property, because when you look at all the facts and figures and the statistics, it can really only do one thing. Now, if we talk about interest rates as part of that as well, at the moment you've got so much debt out there in the market. You've got on your home debt, you've got commercial debt, you've got your businesses, you've got government. Now, all those areas have all copped the interest rate rises across the board. At some stage, if it keeps going the way it is, the whole system's going to implode, and it won't do that. It can't do that. So I believe we'll see a turn in interest rates before too long. We've seen it flattened out a little bit now, but I do believe we'll see a turn, and once it starts to turn, I think it'll go down very quickly, because otherwise the whole system's going to implode. There's so much pain out there at the moment between businesses and household debt and everything that if nothing changes shortly, and then have a look at the banks' profits of late and what they're been calculating and working out and reporting. Can only say one thing: there's been one winner out of it, and that's the banks for sure. So hope you can get something out of this and understand where the market's going and why it's probably going where it is. If you're an investor, it's a good opportunity to get in before things do start to keep moving. I mean, it's moving already, but keep moving there. If you're a builder, be prepared that there's going to be, I believe, an influx of work when we have an interest rate drop. However, I think there's still a lot of pain out there at the moment until things settle down. What will happen, though, if we do get that boom start to move and interest rates drop, again, we will probably see a lot of builders still go under because of their tail end of work they've got going at the moment to finish off. However, we will also see, I think, some of the larger builders take a bigger growth than what's been there before. It'll be the smart builders out there that recognise what the market's doing and prepare early that will be able to do well out of it. And that's where they're going to need to be systemised. They're going to need to be up with regulation, have the T's crossed and the I's dotted, and those that can do it will do well. So until next time, keep chipping away.